Hello, and welcome to CLS's weekly market review. I'm your host, Todd Clark. And this week I'm joined by Scott Kuby. Scott's our chief strategist at CLS and has been with us for a number of years. It's good to have you, Scott.
Thanks, Todd.
You know, this week I think most of America was eyed up and watching TV, watching the NFL. But you and I know each other well enough that we weren't watching the NFL. We were enjoying the U.S. Open. What'd you think, Scott?
It was pretty impressive. I was sorry to see Serena Williams get beat in the semis rather than in the finals, but I'm a Novak Djokovic fan, so that was a good one for me.
I was pulling for Fed. It's been since 1988 since we've had a Grand Slam winner. Steffi Graf won that. It's been a long time, and I think most people were pulling for Serena. It's also been a long time since the Fed has raised interest rate. Has it been since 1988?
You know, I thought that. I went back and checked. It's actually been 2006 was the last time that they raised rates. And there's a lot of speculation they might raise rates this time. So.
Yeah, they're meeting again. Does it matter if they raise rates or not? Is it important? What are your thoughts?
Some, but I think the key thing to keep in mind is that no matter what, rates are going to be very low and very attractive, at least for stocks and interest rate investments. You know, whether they raise rates a quarter of a point, you're still not paying much to borrow money. Your interest rate on your savings account is still going to be terrible. And so don't overemphasize the overall decision that the Fed makes.
What businesses, what industries do well during a slow-growing economy like we're experiencing?
You know, well, one of the things that we look at is good businesses which produce a lot of profits for the amount of book value that they have. And so we look for investments that have high returns on equity. The space where we look that really looks attractive in that is large cap stocks. So small cap stocks have done very well in recent years, but they are not as good at businesses as those big, large cap companies that we all know and love. And so that's one of the reasons CLS is tilted more towards large than small companies right now.
Gotcha. Now, we've experienced a lot of volatility in the market. I think that's going to continue for at least the foreseeable months ahead. However, since the bottom of the market in August, what themes at CLS have worked well? What have we seen that's worked well for our clients?
Yeah, you know, the good news is all of them. We have really done very well out of the rebound. So quality stocks have outperformed on the rebound, and they actually outperformed on the downturn as well.
Sure.
I didn't mention that in the weekly. Technology stocks, which has been one of our long-term overweights, it was the top-performing sector in the U.S. sector space, so that was a great win. Emerging markets rebounded over 7% since the bottom that they experienced. And, you know, long-term bonds, which we have been tilted more towards the short-term side, long-term bonds did not do particularly well in the rebound. No big surprise, but they didn't cushion quite as much as we would expect on the downside. So in essence, all four themes have really worked very well on the rebound.
And what do you see China doing in the months ahead?
You know, that's a big question. You know, while China's experiencing some challenges, I would say that they've got the tools to address them. So the Chinese stock market may end up being fairly attractive.
Gotcha.
It's their neighbors that I think are one of the areas that we should be most concerned about.
Great. Scott, thanks for joining me today and talking a little bit about the markets as well as tennis.
Thanks,
I appreciate
Todd.
it.
Glad to.
Thanks for watching, and be sure to tune in next week.